Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
And here to check the scorecard with us this time is the editor of Surprise Trader here at Zacks, Eric Dutram. So some interesting companies are on the docket for reporting this week. Today, April 18th in particular, is what we're looking at. 3 companies here, right? The first one being Netflix.
That's right. We're going to take a look at some tech stocks here right now. This is a very important week for earnings, and some of the biggest tech names are leading things off. Netflix is first up for the list. They report after the bell today. We're looking for just 3 cents of earnings per share. Now, granted, we use a before non-recurring items metric, and we take out stock option expense, so you might see some differences between the Zacks number and what the regular Wall Street number is. So always keep that in mind. But if we look to some of the recent charts, we can see that the actual earnings growth for Netflix is far lower. We're looking for a 74% decline year over year, and a year over year decline in terms of full year growth, negative 13%. Kind of a concern for investors going into this number is this declining estimate trend. We've seen partial estimates go a little bit lower, and actually the most accurate estimate is now at 0 cents, giving us a earnings ESP of negative 100%. So that's kind of a concern for investors. But if we look for the next quarter, we see a increase in the most accurate estimate up to about 8 cents compared to the consensus of 5. So it kind of balances things out there. And for the current year, the most accurate estimate is far more positive than the Zacks consensus estimate. So this could be a case where expectations might be a little lower going into the number tonight, but they might make that up a little later on in the quarters to come and the full year. So Netflix is kind of a strange company when it comes to earnings, subscriber growth, and some of their international plans are going to kind of be more key than some of these other metrics. But still should be an interesting report to kick things off for the tech sector tonight.
And the news that came out recently that they broke out their streaming service to try to compete with, or Amazon broke out their streaming service to try to compete with Netflix, right?
That's right. Amazon's really becoming a huge competitor in the space. So
any impact that will have won't be reflected until future quarters.
Definitely.
Do you perceive that as a danger for Netflix?
I think it could be in the longer term, but it's still going to be a much longer issue than I don't think anything this quarter or even probably this year will impact that.
Okay, what else you got?
Next up, we have Google, or Alphabet, as they like to be called now. Right. They report on Thursday. We're looking for $6.37 in earnings per share. This is a number 3 ranked stock. We have seen some earnings estimates move a bit higher for this stock as of late. Currently has an earnings ESP of about 4.6%. Go along with a Zacks rank of hold. Generally, that's a good indicator of a beat. It seems like Google's done a lot better job of managing expectations as of late. We can see they had a big streak of earnings misses here for a while, and they sort of had some new management that really helped drive Google in a better, more financially stable direction. And we've sort of seen this earnings beat in the last quarter, and with sort of this earnings ESP in the positive direction and the Zacks rank of 3, things are looking pretty good for Google. And as we can see on this chart, a pretty nice trend over the last 5 years for Google, and a great move as of late, really get us back to the recent highs for Google stock, or Alphabet stock.
Right. Call it what you want. Then there's Microsoft.
Microsoft is also on Thursday. Another company that's going to be really impacted by these trends in the cloud market. Microsoft used to be kind of this old stodgy tech company, but we've seen some definite changes for Microsoft as of late. It's really become much more in tune with sort of the cloud and some of these more new age technology products. If we look to some of the recent trends here, we can see sort of what I was talking about with a lot of the previous pricing consensuses for Microsoft stock were trending far lower. But we've sort of seen a bottoming out of this, and I think investors are really embracing some of their newer products, the Azure product, which is their cloud service, and we've seen the shares kind of spike up recently. It'll be interesting to see if this trend can continue, or if expectations have just been too high. As we can see, the earnings estimates haven't really been moving that much higher, but the stock has. That's never really a great sign. The current earnings ESP is negative 1.6%. So the most recent estimates have been a bit lower, so that's definitely a concern for investors going into the report on Thursday.
So are these the bellwethers that are going to set the tone for the tech sector this quarter?
Definitely. And I think especially Alphabet will be a big one to watch. Microsoft, too, just because of this nice run that they've had. And actually, if we look to some of the recent performances for these stocks, since their last updates, we can see that Netflix, which is this green line right here, the bottom one, it's actually been underperforming the market. Both the other two are pretty much in line with the S&P 500 over the last couple months. Granted, the previous year was the year of the FANG stocks, and at least Google and Netflix were sort of in that group, and they were real high flyers. It seems like they've sort of lost some of their shine to start 2016, so we'll have to see if they can pick up the pace after this Q1 report.
Okay, thanks for all of that. And don't forget that you can check out more earnings information on our website, Zacks.com. If you're not there already watching this video, get on over, link to it all right off the homepage. With Eric, I'm Terry Ruffalo.